I'm Shane with the Manna Group, and today I'm here with Drew. Drew is our Director of Ops. He's also an investor and owns several properties. Today we want to spend a little bit of time just discussing common terms that are out in the market. You hear people all the time talk about flipping homes. If you are a fan of Bigger Pockets podcast, you're going to hear the BRRRR method. We're going to talk about just a way you can use your house to generate wealth by doing some sweat equity and repairing it. Drew, you do a lot of, you own several properties that you renovated and repaired.
Yeah.
Could you explain a little bit what you do, what you follow in the BRRRR method?
Yeah.
And maybe tell us what the BRRRR method is.
Yeah. So the BRRRR method is buy, renovate, refinance, repeat. So you're repeating that process. Now, maybe you get to that refinance stage, you're like, oh, maybe we should sell, and you move into your next house. But the whole process is how do you build some sweat equity in your home and be able to capitalize on it, whether it's your primary or a rental, or a primary or an investment. Yeah.
The BRRRR method is typically more common to rent that property and keep it.
Typically, yeah. Now you can do it if it's your primary as well, and maybe you live in it for a year or two, and then you move on to your next house.
Oh, great point. Why would you live in it for a year or two?
So, by lending guidelines, as long as you live in it for a year, you can buy it as your primary residence, and then after that, you can move on to the next. Now, maybe you want to live in it for 2 years, because once you live in it for 2 years, you're free and clear of some capital gains. Which is huge tax savings. Capital gains can wreck you.
If you bought a house for say $200,000 and it was a pretty rundown house, needed a lot of work, and you renovated it and put a lot of sweat equity into the home, and then it was worth, we'll say for math's sake, $400,000 selling in 2 years. That's $200,000 a gain. Maybe you have some deductions on all those renovations. You spent $50,000 in renovations, so now you have $150,000 in gain. If you wait to the 2-year mark and you sell it, that $150,000 gain is tax-free income because it was your primary residence. If you're under the 2-year time period, you're going to pay capital gains on that. Now the threshold drops pretty substantially after the first year. If you sell it within the first year, your capital gains are really high. It's called a short-term gain, and you pay a higher rate. After 1 year, it drops down substantially. After 2 years, it completely goes away. If you are single, you have up to $250,000 of tax-free gain. If you're married, they allow you to get to up to $500,000 tax-free gain, which is a huge.
It's a big savings.
Big savings.
Yeah.
Be 20 to 30% in the tax rate. So you're talking about a big chunk of change.
Yeah.
How does that apply though if you do the BRRRR and you're renting that property and you have a lot of gain? Do you still pay taxes on that?
I mean, you only pay taxes when you sell it, and so in theory, and when you refinance, if you do refinance at that time and you want to pull money out, well, that's a loan that you're taking on the house. So the IRS and the government sees that as debt rather than income. So you're taking a loan on the house that you fixed up and gained the equity in, and then going to buy another house maybe.
And maybe rents have increased over that time when you refinance. And so your payment might go up because you took out a bigger loan, but you may have higher rents that can pay that payment, or that
can cover it. Yeah.
That can cover it.
Yep.
So then that's where you pocket some of what you've done to renovate. You can take some of that because it's basically just in a loan.
Yeah.
It's not realized as income. So it's a very effective way of taking some of that sweat equity that you have and cashing it out.
Yep.
Yeah.
For the max amount you can get.
So are you a bigger fan of BRRRR to hold or to flipping? Because we didn't really talk about flipping.
Yeah, I'm a big fan of BRRRR to hold. I'm in it for the long term. I'm thinking if I can, say you have 10 properties that are all paid for free and clear, and the average rent is $3,000 a month. That's $30,000 a month for your retirement there, which I would say is a pretty decent chunk. Now rent rates are going to continue to, elevate with as well as inflation over the years, so you stay ahead of that and with it. So it's a great way to have an extra retirement, and that's kind of the way I see it as.
I saw a really good economic clip on that.
Yeah.
If you take all of your cash and put it in the bank, inflation outpaces your cash. That
Absolutely.
cash is reducing.
Mm-hmm.
If you took some of your cash and put it into stock, that's appreciating.
Yep.
There's some risk there. If you put it into real estate, it's appreciating. There's some risk there. Because we're in real estate, we tend to think that real estate is a little more stable. It's also nice when you have rents to offset those costs, some residual income there.
You don't have to put it in gold. I have a buddy, I've been learning a lot about gold.
Really?
So,
gold or silver, that's the ticket.
there
huh?
you go.
Okay. Let's talk about flipping just a little
Yeah.
bit in more detail. You've seen houses that you could flip. What
Mhm.
would be like a standard flip process?
A standard flip plot process for me, it's going to be price point of the house, and then looking at the repair costs, and then comparing that to an ARV. So what the
ARV is after repair value.
after repair value. So wanting it to be in certain percentages as well. I'm also I'm a little bit more. Some flippers will flip anywhere in the area. Like they don't care if it's here or there or. I'm very specific to the areas I want to be in. Part of it is also because I'm more trying to hold, and so I want to invest into areas that I feel like, hey, these are going to have really good returns, not just in the general housing increase, but what areas in Spokane are going to be growing a lot over the years. So maybe I can capitalize on that increase.
Yeah.
But yeah, a lot of it comes down to the numbers. It's a big thing, as well as the size of the house. A 2-bedroom, 1 house isn't going to flip as well as a 4-bed, 2-bath. And so breaking it down to the cost per rooms, bathrooms, it kind of all, those are just little pieces.
Yeah.
I think the interior design side in me is like, I don't want to flip a boring house. I think it's fun to flip a house that has some creative things to it and fix it up and kind of bring something back to life.
I think the important thing to realize with flipping versus what we would call the BRRR method that Drew uses is that flipping is a way to make money. It's an income producing method. So I buy a house for $200,000, I spend $50,000 in renovating it, and then I can sell it for $350,000. Now I've made $100,000 in profit. That's income I've made. The problem is that now I do have to pay tax on that. I don't know if I made $100,000, I don't mind paying a little bit of tax. That's not the worst thing in the world.
Yeah.
But a lot of
30% hits hard though.
it does hit pretty hard. Well, then what a lot of flippers will do is they'll take those profits and reinvest it into another project and take a smaller portion of the profits, so they're not paying as high tax, and they can use it as seed money to flip and then flip and then flip and then flip.
Yeah.
And they may choose in that process to hold one.
Flipping is a way to gather cash. Is essentially a big reason why a lot of people flip. Is it's for their income, or they're trying to stockpile cash to then invest in something that they want to hold long term. That's typically why a flipper is in the industry.
Absolutely, yeah. Just a different way to produce some income. So there's a little bit of BRRR and flip and what we do. Any tips or tricks that you would like to say, hey, these are important things to pay attention to?
Some important things to pay attention to. Your gut is a big one. You can kind of, sometimes I know when Cassandra, my wife, and I will go look at a house and I'm like, oh, this is awesome. And she's like, I don't know. And I'm like, you're probably right most of the time.
Helpful. Our wives are helpful.
I think, trust your gut in the process. And I think don't take on something that's bigger than you can handle as if it's your first time, especially if maybe you're, how do I do this while on top of my full-time job or just getting started?
Yeah.
I think YouTube can be your best friend as well. Like I know maybe renovating a kitchen can be scary, but it's a place that you can save, a ton of money.
Yeah.
Versus hiring it out and paying a contractor to do it. And it can be not as scary as you think, but there's a lot of different things to balance and juggle. So I look at the time you have available, maybe meet and talk to some people that are in the industry, and then kind of see like, okay, do I have the capacity to do an entire house? Or do I have the capacity to do like, oh, this house needs a kitchen update really, or a bathroom, and kind of see where that is and go from there.
So when you're considering doing a flip or a BRRR method, what types of options are there for funding?
There's quite a few options, and a lot of it depends on how much cash do you have. now, or is it your primary house that you're trying to do? You know, for a primary house, you can buy a house anywhere. You know,
Yeah.
We've helped people pay $500 and they just bought a home. We've also had people, you know, that 3 to 5%.
Yeah.
Now, if you're trying to buy an investment property, typically it's going to be a 20% to 25%, just because it changes on if it's a single family or multi-family house, different lending programs. And typically as well, so there's some programs that don't look at your income, that only look at the property, so that's called a DSCR loan, or maybe there is one that does look at your income to see like, hey, can they afford this with their down payment, their assets that they have, and their income, and it's a lower rate typically.
Yeah, so for the more average buyer, you have your primary residence that you have a mortgage payment on, and then you got to consider, if I bought this other property and then I have a different debt to income problem, the bank's going to want to make sure I can afford that house payment. Typically when we talk about BRRR or flipping, we call those holding costs.
Yeah.
And there's a certain amount of holding costs.
And typically a lender, if you're going in the route of like, hey, looking at it as I'm buying an investment property that's looking at my income as well, they'll take the rent value and multiply it by 75% to see, then they'll take that difference. Like, can you afford the difference?
Right.
They're not looking at an entire, can you afford a $2,000 mortgage payment? No, they're like, can you afford $500 of a mortgage payment extra? So I'd say you have several options when it comes to lending. First option is going to be underneath your personal. Can you buy it as an investment property that's traditional way? There's a DSCR program where it only looks at the rent values of the house, and they'll loan on a 1-to-1 ratio rather than a 1 to 0.75 as the traditional option. Third option is going to be a hard money kind of there, and then oftentimes you do see a fourth option is seller financing. Sometimes there are seller financing deals that can actually be a better option than a lending deal.
They can even be really good options for the seller, because the seller can delay their capital gains issue maybe if they have an issue there.
So those are just 4 different options. It all depends on the circumstance, maybe how much cash you have, and
those are really good points. I think we would stress, for sure, know what you can bite off. We would like to take some time to point out some people we know that do flipping well. There are some people that do it as their full-time profession. There's quite a few people that use flipping or house renovation more like a BRRRR model to generate additional wealth for their family. And it's a very effective tool. Also you're doing a great thing for the community and taking maybe more rundown houses and make them look nicer and better. This is just scraping kind of the surface on a bigger topic. If you have more questions, we'd love to chat with you. Feel free to reach out to us, and we'd love to answer any questions you have.